Now, the Nairobi Securities 20 index fell to below 1,700 for the first time in close to 20 years, largely due to the increasing economic uncertainty in Kenya. Now, for more on this, we are joined by Kevin Ngige, a senior equities analyst at Genghis Capital. Kevin, thank you for making the time and thank you for joining us. I don't know if to, again say tough times, but almost 20-year low there for the Nairobi Securities Exchange Index. It has gone up today at the close of today's trading, just slightly, but last week ended at 1681, 1691 today. What is happening?
Thank you very much for having me. Indeed, it's a pleasure to be here. Yes, so the uncertainty continues and the capital flight, of course, from our markets continues. So it's as expected. Again, of course, we have those exogenous factors that you mentioned earlier, the Russian invasion of Ukraine. We have the supply chain bottlenecks with Africa, of course, the frontier being a low margin area for most freight cargo ships. So all these have really complicated things for us. And now in Kenya specifically, we're just 2 months shy to an election that is, I think, will be the most hotly contested election ever, with no clear winners, two horse race. Of course, foreign investors, as with local institutional investors, don't like periods of uncertainty. We've seen yields going up, or rates rather going up in the developed market. So, for most investors, they'd rather go for a 2.25% a surety of their principal than come here to gamble 15% and be on the verge of losing everything. So yes, it's as expected, but the ban has been exacerbated by our proximity to the election.
Kevin, I don't know why, the math is not mathing for me here. And the reason I say that is there were worse elections, if one would look at. You saw the post-election violence that happened that year, but never did it ever go below that one magical number of 1,700, if I'm to call it that. 1,600, Geoffrey Odundo and his people, what are they not doing?
Well, one, again, there are a couple of things. We've had a couple of talks with self-regulating organizations, the SROs like NSE, capital markets. We've had a couple of roundtable, and one, of course, there is sort of like incapability, if I may put it that way, to bring in new quality companies to IPO. We've seen the drought we've had. If you're going to talk about those that came by introduction, your homeboys, your home Africas. Nowadays, it's the expectation in Kenya that any new IPO, the first message you're going to receive from these companies is a profit warning. So it becomes the couple of things that investors are really talking about. It's become a play where owners of businesses are coming to dump their assets onto new buyers, and then thereafter it's just route all the way down. So there's that confidence. The investor sentiment is not really positive, if I may say so. Then, of course, you couple it now with, we're on the verge of World War III with Russia and Ukraine. Kenya is the main importer of crude oil, as we don't produce any. We are a main importer of commodities such as grain. So we've really been impacted. Our fiscal policy, we really don't have any space now at almost 70% debt to GDP. We have an election that is coming. So there's so many things. If you look at the fundamentals of the company, for instance, Safaricom, the fundamentals are strong. If you look at the tier one banks, I mean, their full year numbers, or even if you look at the Q1 numbers, they're really strong. So it's just NSE need to reinvent themselves. They need to think outside the box. For instance, they're charging folks to train them. That's a backward mentality. It's not one to move forward. So they really need to relook at how they do things, their strategy. And we've pointed this to them, including things like day trading and giving an incentive of only 5%. So that doesn't cut it, and the data has shown.
Kevin, gradually when you talk about invention there, and before we talk about the dollar situation there in Kenya, when we talk about invention, one would expect things like the NSE to build an ecosystem that is locally. With all the capital flight that's happening, there is also a lot of local cash that could go into the stock markets, and that cash hasn't been attracted to the bourse. So why are they taking or dragging their feet in getting players like the Kevins of this world or other possible shareholders to jump onto the stock markets? Because Look, his app is working and so many Kenyans are investing on the New York Stock Exchange, and very few of those Kenyans are equally investing on the Nairobi Securities Exchange. Why aren't they tapping into that market?
So first and foremost is you look at the ease of doing business, more like how our country is ranked. So the NSE have been really sticky in the way, they approach investors. For instance, you're going to a campus and you're telling folks you're charging them 6,000 for training, simple training. That's disincentivizing in new investors. You'd rather give it all the information for free. Information should really be democratized. That's one of the ways to do it. If you look at how many of the folks have been brought or have been caught up in the sports betting menace. I mean, it just shows you like it's easy for an investor in sports betting to just take their phones. They can really see their margins. They can see what they're spending. Like it's just the ease of doing business. We didn't have that with the NSE. Of course, they're going to say they liaise with their agents who are the stockbrokers. The stockbrokers have done a lot. But then again, out of the 65 listed stocks, there are only about 8 to 10, a handful, if I may say, of stocks that an investor can invest in. So we don't have that volatility to say, like NSE is crazy in a way. You bring in day trading, you're trying to copy and paste what's happening in the US. In the US, they have this volatility in the different segments of the stocks they have. Here, even our gem stocks don't really move. So day trading is a baby that is dead on arrival. So I mean, the derivatives, you look at it, you only have an average turnover of about 3 to 700,000 Kenya shillings in a week. I mean, it's nothing to cut it. So where could investors invest? So I think investors' hands are tied. The NSE really needs to reinvent itself. It's about time they bring in stable coins and just